Everybody, morning. How's it going? So we got channel members Rob, Don, Diane, Darren, Craig, Dan, Joseph, Arturo, Ivan, Terry, Frank, General Rush, Aki, Jerry, David, Skaggs, good to see you. Mad, good to see you. Ted, Joy, welcome. Retail sales coming in pretty good. And I guess, let's see, flip it over. And we've got some numbers. PPI came in light. Where are we? Here we are. So PPI, look at this. Look at the core right there. 0.4. That was a big, like we were expecting, that's negative 0.4. That came in 0.7 swing month over month. That's a big change. For retail sales, the core came in light, but retail sales overall came in nice and spicy. There, month over month, PPI. Look at that. That's a 0.7 swing. Holy moly. PPI. Nice big fat swing. Then we got Powell out there speaking. Also, blabbing some stuff. Caused a little spike in the pre-market here. Not much. You can see we're down 16. Look at this. Downtrend off the highs here. That little spike is what happened here. This is starting to be a downtrend. We're getting through the 15-minute back testing. Watch out. Would be what I say. Before we talk too much trading, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, and it is not a recommendation to be buying or selling any financial instruments, including stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. You may lose money. And if you want somebody to tell you what buttons to push to make some money, first off, you go watch people on YouTube. They're like, buy, sell, sell, sell. I'll tell you what to buy. Buy these, buy this now. They're all full of crap. Full of crap. All right. I was watching an interview yesterday with a friend of mine. A friend of mine got interviewed. He was like, look, almost anybody that gets on in the morning and tells you, buy this now to make money. One, by tomorrow, that stock's probably down. Two, they don't post their trades publicly. And don't show you how to make money. Actually, like, don't show their whole account. Don't show, like, everything they're doing. And for a long time, you know, I've posted track records for people and services and stuff. But, and my friend of mine, you know, I kind of heard him and started sharing one of my whole accounts right here. And I mean, it's right here publicly available on K-Info. You can look me up, Jeffrey, right there. All time, I'm up 1.7 in this account. I just have one account linked out of all the accounts I trade. It was like trying to link a ton of accounts is cumbersome and it's confusing. I just was like, let's link one account and do a $50,000 challenge. So the goal here is to make the 1 month profit number right here hit 50K. That's the goal. I'm going to do it in the public right now. All the trades I've done over the last month, 100% win rate. Average gain per trade, 98 bucks. I've got some small ones. You know, this one yesterday, 132 bucks. 89% average gain per trade. That's pretty spicy numbers right there. Not bad. Not bad. And if we go to the 3 month, I hadn't been using this account. I just linked it up and refunded it. specifically for doing this, to show you that I can make money trading right here. And the 1 year. So this all time goes back all the way back. If you want to see there you go. I screwed around back here in COVID times. You see 2020. Then I left this account dead, basically. Refunded it right here in April. And you can see the profit numbers here. Just want to look at the month. There you go. That's how the month's been going. 3 months. And I was doing nothing in this account. There you go. All the trades are available. I guess you have to be a pro member to see all the details of every trade. But they give you a free trial on the pro. So right there. Throw that link in the chat. I mean, put my money where my mouth is, basically. How do you manage a whole portfolio and make money? Right there it is. Right there it is. Not doing too bad, I don't think. I mean, it's not a huge account. It's not a huge account, but it's going the right way. Definitely going the right way. How's everybody doing? Everybody having a month like this? Everybody's account look like this? Or do you got big swings? It's more like this. See, I don't like that. This is very... That's weird. Somebody's calling me, but don't need to talk to him, I guess. Yeah. So anyway, where do we expect the market to go? I go pull gainers and decliners and build a list, and we go through it every morning. And I got something new coming out next week for people. A lot of people have said they don't like trading options. And that's cool. I came up with, I've been doing trades on leverage tickers. I do warn about leverage every day. I warn about it every day. It seems like when one of these leverage tickers comes up that you can lose substantial amounts of money. And let's see, MSTX is a prime example here of outperformance to the downside, right? Because MSTR, it got this pullback from this high down to this low. That was a 56% pullback. So if you take and 2x leverage that and put it on MSTX, that'd be like 100% pullback. Yikes. Go from the high down to the low. And 92% it pulled back. So like almost 100% it pulled back. Holy moly. That's kind of crazy, right? So once it does some kind of crazy pullback like that, it's hard for it to recover. Right? These leverage tickers have problems like that. Now, when you go to MSTR and look at it right now, we have an upside potential to the target. We just go to the conservative target. We got to put the leverage, this chart back up. So if you go to this chart right here and you go, well, I expect it to go up that much, 46%. That's a new all-time high on MSTR. 46%. So we go back to MSTX. 46%. But we've got 2x. So 46% becomes 94%. Whoa, look at that. We're not even getting anywhere close to new highs here. Gotta be careful. Even if this were to, I mean, there's probably very little chance this is going to outperform. So there is danger here. All right. When a ticker experiences a large pullback, you don't really want to ride this down. That's the bottom line on these leverage tickers. If it was a 3x leverage, this thing probably would have had to do a reverse split down here. Now, Seeing some upside. Potential to go even higher right there. And over the long term, if you hold this longer, this performance is really a one-day performance, this 2x. If you read the prospectus on most of these 2x leverage type tickers, these ultras and things like that, usually they have a 2x, sometimes a 3x, very rarely a 4x. And that's usually just trying to match one-day performance. One-day performance. When you look at the long term, they tend to underperform. So this may have outperformed over here, probably outperformed here. Actually, it was underperforming because the pullback was 56% on MSTR and it was only 92% here. And then we're coming up off the lows again. But this next move is probably going to take it to a lower high. And we saw that on NVDL. We saw this right here on NVIDIA stock too, where NVIDIA went on to make higher highs in this vicinity, but this 2x leverage right here made a lower high and then proceeded to outperform to the downside. So you got to be, that's why I always warn about playing the leverage tickers, but then I especially warn, like, there's no reason to play options on these because they're already leveraged. You're playing leverage on leverage, that gets super dangerous. So I'm going to kick off a new service next week where you just trade shares. You don't have to worry about options. Just trade shares on leverage tickers, trying to take advantage of this. Now, one of the nice things about these is there are longs and shorts. Right, there's short tickers that we can play. So you can just go long shares in a short ticker and be short the underlying. But, I always talk about charting and doing each chart on your own. But when you're doing these leverage tickers, you've got to look at the underlying. And one that's particularly interesting here today, particularly interesting to me today, is this chart right here. Because gold did this pullback that I've been talking about. And we hit the ideal levels yesterday, right here. Now, actually, we hit it this morning. If you look at the GC charts, we hit, look at this. Look at this, we hit the target. Holy bananas. We hit that target. Almost dead center. Look at that. Look at that. So now for the next couple, probably next couple weeks, I expect this to go back higher to the next target. Pull this on over. So between now and possibly June, I expect us to see this kind of move up, back up to the 618 right here. I drew this on the chart. And there's the potential next target. How do you take advantage of that without buying options? The thing about options, you run out of time. You got to be right on time. I mean, you can go way long, but then your gains are smaller. You could go really short, but then you might run out of time. It's like a giant risk. And I talk about this when we talk about the morning, my favorite setup, and I talk about, standard deviations and how long it takes to play out. So you might run out of time if you don't pick right. Then you got to pick the right strike. Like, do you pick one in the money? Do you pick one out of the money? And the biggest bang for your buck is to go out of the money with your pick, but you want it to go in the money by the time you're going to close it. All right, that gets to be hard to do. You got to be exactly right on time and direction and price. And then if something's particularly volatile, like we've had a big down in gold here, those option prices are actually running a bit spicy because of the pullback. And it's got a lot of attention because we hit a all-time high up here at 3,500. So now it's like there's implied volatility thrown in that can decay if we go back higher And that could cause your option to lose money, even though you got time right, price right, direction right, and IV ate some of your profits. This is there's a lot of things you got to get right to do options, and any one of them can blow up your position. So this did spike down here. So what I did today in the pre-market, just before I came live, I bought some of this Ultra Gold. I actually picked it up at $129.99. I'm already up 50, 60 cents roughly. Now, target. How do you figure out the target, right? Go back to an underlying. We're going to use this GLD chart right here. We're going to go from the high. We're going to go down to this low. We don't really have the overnight low, but we're looking for this move up right here. Now we could go to the GC charts. Let's just compare, all right? Let's compare and contrast a little bit. So we're looking for this move back up, and I've already drawn the target over here. Put that low on here. When you move from something like this, we expect to move back up. Let's just go with the center. It's about a 7%, 7.5% move up, roughly. Compared to GLD, we're looking at this low, this high, back to the 618, basically a 5% move up. A little bit lighter. Let's go more conservative. The smaller number is more conservative. So 5% move. UGL, what would we be looking for? This right here, basically a 10% move, roughly. I'm actually got my order a little bit more conservative than that at 140. Probably going to take my money back off at 140. You can draw the fibs, but they don't always necessarily work on leverage charts. There you go. Expect a 10% move up off the low on leverage, ultra leverage. How do you know if it's 2x or 3x when it just says ultra? You got to go look it up. Pro shares, there's brands, there's T-Rex and Pro shares and iShares and VanEck and, tons and tons of different ones. And they all manage things a little different. There's no two that are alike. There's no two underlying assets quite alike. So you got to, this is a very thing, and I'm going to try to add some clarity to that by providing a service where I show you what I'm doing. So stay tuned for that next Tuesday. We're going to start making that available. For my term trading lab people, you've seen what I've been doing in there since January when I made the channels and the idea. So you can let me know in the chat if you're excited about this or you got questions. But this is a potential I got into today right here. Now, we talked about hymns the other day, how it had big upside potential. I actually didn't like that candle yesterday and closed my position because this is probably not immune to that market pullback that we might get possibly back down in this area, which is where I got in with the original leverage. Now, I booked a 50% gain by getting in right over here and getting out yesterday. Or I guess it was 45%. Got out right there. We might, remember the outperformance on the downside. We could outperform and actually come back down in this zone before it pushed it up again. So you got to be nimble when you play these leverage tickers. Hey, Kimberly's here, my favorite subscriber. So hymns, if we look at what's the potential pullback right here, now it may just rip on up to the target. That's the pattern. What's the pattern we're using? Just the market roadmap. That's just using the roadmap line pattern. Roadmap line bounce. That's basically what I'm using. So if this were to pull back from that high down here, it's a 25% pullback. All right. This is why I was like, yeah, want to probably get out. So 25% pullback on leverage. We could be looking at a 50% pullback. It takes us, like I said, back down in this area right here. Outperforming to the downside. That could, I was in up here at 33, got out up here at 50. I could be potentially back in at around 29 or 30. So, get while the getting's good sometimes. Now, M's on the upside. You got to weigh your upside and downside risks here. This right here, 38% upside, but a 25% downside. So double that up, 60 to 70% upside potential on HIMZ. But you also have a 50% downside potential right there. Sounds a lot like options, right? So you get the options like gains and risks without having to worry about all the being right and getting the time right and getting IV right and getting the strikes and the, all those little details. This one, you just got to get direction, but you can put stops. And a huge advantage, like I did today, I got in the pre-market. You can trade these in the extended hours market. Can't really do that with options. So another big advantage right there. Another big advantage. So we'll make this available next week. Hopefully it's something that everybody has some interest in. Like I said, Term Trading Lab, you've already got it. So it's not something you need to buy because you already have access. That all access is all access forever. So you've got all access. Now, as I warned, we might be extending this market here. We might be about to get a pullback. S5 FI came up near the top, but looks like we may have pushed this down. And then S5 TH is just hanging out in the middle. We've been pushing it a little bit beyond the danger zone, really stretching the upside. And when we run the fib line from the high to the low, right at that 786 line, couldn't really step across with any, like I said, on these downside moves that we've had, a lot of things stepped across that 786, poked a toe across, and then quickly reversed. Same situation here. We're seeing this push it to an extreme and then start to roll. So we may see this come back down to this area down here. That's kind of my primary expectation right now, is to get a larger retrace in the market. One other thing that we had on the upside, when you look at the way we started this, big move up, big retrace, next move up, we had the potential to go all the way up to 6,000 on the futures. We had that drawn on here, and we came up just a few points shy of tagging that 59.30 line. That's just taking the first move up, the retrace, and projecting that next move up. Looking at the 1272 right there, we came within a couple points of hitting it. I kind of expect a bigger retrace right there off of that. Now, leverage tickers. If you wanted to play a leverage ticker and you're like, well, all right, SPX, this looks pretty spicy. We could see a nice 10% correction. Possibly. Right? How could I play that? SPXS is one of my favorite ways to play with a 3x leverage on it. Now, 10% on SPX would be a 20% here. So we're only looking for a move like this. Nothing too crazy. We're not looking like we're going to pop up to here again. We're just looking for a move from $5 to $6. About a $1.10 move. Nice 20%. And you'd be like, well, I could play options and get way more money if you're right. Yeah, if I'm right, but got to get timing right. You got to get direction right. You got to get IV right. You got to get all those things right. This right here, you could stop out right down here and risk just a little bit. You can be out at 540 if we dip further down for the potential to make the $1.10 upside right there. Now, SPXS, it's been beat down. It's pretty rough. There's lots of other ones. Like there's a STS right here. Higher price ticker. Ultra short, leverage short. If we were looking for that 20% upside, you'd be like, oh, this looks a lot better. Still 20%. 20% still 20%. All right. 18 to 22. Right there. Takes more money to get in. All right. So that's a way to play. You could be like, well, what about the Qs, right? What would we be expecting over here? Let's just take a look, see what we got cooking. So we've got the potential move up off the lows. Right there. We tag that 1272 line, showing some weakness. So what if we got the pullback? This low, this high, potential to come back down. Maybe maybe we outperform. Maybe not. Let's just go right in the middle here. Let's say 12%. So SQQQ. That's an ultra, so 2x. Could see a 24% upside. We could go from 24 to 29. Not too bad. And you can just buy shares and you can get out, get out all the time. There's different ways to play this stuff. I've heard from people not wanting to worry about options. It's too confusing. There's a lot of complaints. So this is a way to get kind of option-like gains. It's not option, it's not one-to-one or anything like that, but it's options like leverage gains without having to buy options, without having to worry about the strike, without having to worry about the expiration, without having to worry about the IV, without having to worry about time decay. Don't have to worry about any of that stuff. Just the shares. You can get in and out. And there's a virtual limitless. All these are inverse. You can go ahead and TradingView, click on markets, come down here to ETFs, click on the button, click on the overview, and then when you come on here, you can click on inverse, and there's a whole list of them. How do you know which ones are the good ones? That's the work I was going to cut out by providing the service, and just give you a few trades a month. And then you've got leverage tickers, a whole, and there's a whole selection of those we can trade. And sometimes you don't want to trade leverage. Sometimes you just want to trade the 1-for-1, but you want to do it cheaper. And you can find opportunities in here. You can find ones making 52-week highs. You can find ones making 52-week lows. So there's lots of opportunity here. Now, same with markets though, when it's going against you, you got a GTFO. Get the fudge out. All right? Don't stay in a trade with a leveraged ETF, especially if it's more than 2x leverage. You stay in it way past the expiration date. Like there's a 3 Uber. I mean, they got all sorts of stuff in here. And there's ugly. There's ultra gold, ultra QQQ, QLD, FAS, 3x bulls on financials. They got all sorts of stuff in here. All sorts of leveraged tickers. And I don't know, I haven't really seen anybody else offering some sort of thing like this. So hopefully it's appealing to people. Hopefully it fits in your arsenal of something you want to have access to. If not, that's cool. You don't have to do it. So CL turning down off of that resistance. This might go for that lower low I've been looking for. So this will be a pivotal move here on oil. If we hold a 618 retrace, I'm probably going to get some bullish exposure. So I'll be looking for this to hold this 58 area on this pullback. If we hold it, turn back higher, that'll probably set this up for a bullish breakout of all this resistance. If we break down below that 76, probably going lower low, and then we can set up the reversal. So either this or this. That's the two kind of primary expectations I have on oil right at the moment. Keep my eyes on it. Gold, we already kind of talked about. I think we're going higher from here, probably back to 3,300 at the minimum. Bitcoin, starting to look a little unsteady. We can see this pull on back right here. Wouldn't surprise me one bit. Now, we could just stop at this consolidation. We could pull back to there, stop, and set up the upside move. Ideally, I want to see it come back to here. It may not come back to there, but this lines up with the, when we look at it, yeah, delete that off. We've got this move up right there, and I need to pull that up just a hair more. The 618 and the roadmap line come together right there. Right there. Right there. Ethereum needs the whole, like, if we're going to be immediately bullish, we need to hold the roadmap line. If we get below it, we're probably coming back to test the downtrend of highs that we broke out from. Right there. NKD came back to the bottom of the box and just above the roadmap line. If we push below that, probably heading back to a 618 retrace, and the S&P is probably going to do it with it, and probably the NASDAQ. That's an indication of global liquidity right here. Be careful. Seeing the dollar continue in the channel. It's kind of a squeezy channel, and we may continue that until we meet up with the roadmap line sometime out here in June. Right there. Could break out and go quickly, but at this point we're just kind of hovering in this channel, and we could see it be slow and boring and not get there till June. All right, Mag 7 stuff. We've been hitting these lately, and I put them on the list because due to popular demand, everybody wants to see what's happening with our biggest tickers every day. Right now, Apple hitting a resistance. We've got another resistance above us and another resistance above us. We've got this prior high right there on the daily chart. We've got this roadmap line right here just above us at 220. And then we've got the 618 level of the big correction right up around 225. So we've got like 215, 220, and 225. That creates a $10 wide big resistance zone that we're kind of double topped at right now on Apple. And it wouldn't surprise me to see a bigger pullback, possibly to a 618 on the downside around 186, especially if the bigger market does a bigger pullback. Amazon tagged that resistance zone, the danger zone, and now potentially gonna pull back, especially if the market, all of these hitting resistance and starting to pull back. That kind of, it's like cart and horse. Like, is the S&P dragging these down, or are these Mag 7s dragging the S&P down? Cart versus the horse, we're probably going to see some pullback. We came up in a crazy move, one of the biggest, fastest, strongest moves ever. We set a 20-year bullish record. We hadn't been that many bullish days in a row in 20 years. What am I talking about? Talking about this move right over here on the S&P, right in here. We hadn't hit that many up days in a row in 20 years. And then we put a little icing on the cake. Guess what? Usually outlier moves get big corrections. All right. Gotta be careful. It's not a time to go. This is not a time to YOLO. You only live once and throw it all in. Google. This is a pretty bullish chart right here. This did the 618 retrace, pushing up into that resistance zone right there. This can blast out. It probably won't be immune to a pullback in the market, but it could just kind of hover a little bit on that pullback. And then once we get through it, go ripping. So I'm very interested in being long Google for the next rip. Meta came up into that resistance zone I've been talking about for so many tickers here. We're right up in there. We kind of confirm we're going to go higher, but that doesn't negate getting a bigger pullback before we do go on higher. I am bullish on Meta, but I am also cautious on Meta. It's very high priced. A little bit out of my price range to buy 100 shares and just sit on them right now. Microsoft. This is bullish. I mean, we're testing those. Look at that. Look at this move up off the lows. This thing outperformed on the downside. Got 1, 2. We're getting super bullish. If we hit that 469, this thing could really make an expansion to the upside here. 486, 500, possibly even up to 540. Don't expect huge numbers above that just because of the law of big numbers. What's the law of big numbers? Right now, Microsoft is the biggest company in the land at like $3.3, $3.4 trillion. I don't think I refreshed this to get the, almost $3.4 trillion. What does it take to double Microsoft's share price? It takes $3.4 trillion more dollars. So this would be like $6.8 trillion company. How many $4 trillion companies have we ever seen? Answer is 0. This could be the first, but we've had 0 $4 trillion companies. We've had 3 $3 trillion companies. We've had 0 $4 trillion companies. We've had 0 $5 trillion companies. We've had 0 $6 trillion companies. So for this to double, it takes a lot of effort out of the market. Got to pull, got to make, create, pull $3.4 trillion out of the rest of the economy to push Microsoft up to a double. Versus all these ones down here that could easily double and not take trillions of dollars. So where would you rather place your bet on something that's never happened or place your bet on something that's much easier? I'd rather go for the easier and stay down below these $3 trillion companies for me. You can do as you see fit. Be careful out there. Be careful. Microsoft has upside, but it's gotta take a lot of money to do it. Nvidia struggling right here at the top of that box I drew. I would expect it to at least come back down and retest here. If not, break down and go lower. Potential though, we've set the potential to go up on the upside. Those upside targets, 161, 169, right there. You may be like, well, this seems like it could double pretty easily, 266 doesn't seem that far away from 133. Back to the law of big numbers. Right there, $3.25 trillion. It's going to take $3.25 trillion more dollars to double that. Right there. Every 40 bucks, basically 41 bucks, is $1 trillion on Nvidia's stock. Where does that money come from? It's just simple. Like, it's a simple but rhetorical type of question. Google, Tesla finding its way into the danger zone. We have this bigger resistance right up here at 380. I kind of expect some sort of pullback back to the roadmap line at this point. You know, do we do it from where we are? Do we do it from 380? At some point, I expect some sort of pullback, but it doesn't negate just ripping higher. I mean, we could just not correct. We don't have to correct. I mean, we got little bitty pullbacks when we really started moving over here. You know, little baby pullback, and then it just ripped right up. Didn't take many days to go from right here where we were right up to 48. Can do that again. Irrational can be irrational. We consolidated in this area before and then ripped it right up to all-time high. And then came way back down deep. Usually big exponential moves get big corrections. All right, I go pull stuff moving. $2 or more on the upside, put it on the gainers list. $2 or more down on the decliners list. And I pull my setups from my nightly scanner, which there's only 4 today. And I don't think many of them look super hot. So boot right here. When we close above the 618 today, probably confirming the upside for 189. Right there. DE. Very favorable story came out on Zero Hedge last night about DE. And we're seeing it hit the target today up here at 529. Entry was back here at the end of April. And there we are, already up there. I talked about it. You can see, you know, we've got everything drawn on here. Earnings came out pretty nice and spicy. And right up to the target. Beautiful. Foot Locker. Wow, look at that move. Holy moly. So this was beat down. This was, you know, potentially a bottom down here. What's it going to take to get me bullish on Foot Locker? A lot. Honestly, a lot. We beat this thing down. We being the entire market. That was a pretty rough correction right here. Went way down. I really expected this to kind of go lower low. Now we put it on the log mode and things start improving though. We did a 618 move here, right here. So we've got this low, we've got this high. For those you think we can't do big, large retraces on stocks that have, you know, quality companies, well, right here's your proof. We can do big outsized corrections. This came right down, very proportional on the log mode. Now, the beautiful thing about the log mode, beautiful thing about this is it sets us up for potential upside, giant potential upside right up here. This is a long-term potential play, very similar like Nike when I was pulling it up yesterday. What do we need to see? Well, right now, that's already a nice potential move. Back above that weekly roadmap line. Yeah, we're above the daily roadmap line. We get the close above it today. That's the first sign. Back above the weekly roadmap line. That helps. Back above the 618 right here. Right around 3650. Got some alerts there already. I've already been waiting for this potential reversal. If we can get above, potential 10x your money right there on shares. You don't have to play options to get giant upside returns, but it might take a while. It could take 10 years to get up there. Would you wait 10 years to buy? I mean, looks like Dick's announcing they might acquire Foot Locker. So right there. Maybe. That doesn't mean it's going to happen. That's just, they're trying. So, big upside on Foot Locker. But, you know, maybe it works, maybe it doesn't. So, got to be careful. I don't like to play acquisition deals. So, that would put it off the list for me. But I still got to do lots of things if we're going to go higher. And that's if it doesn't get acquired. So, usually we pop up near the acquire price. They probably 28 to 30 would be my guess on where the actual buyout price is. I didn't look at all that news. And it's kind of funny. We hit the downside and then we reverse. And if it buys out, this will go away. But if it stays in the game, we can see it go up there. So there you go. They didn't actually acquire. Like, it's a deal to acquire. The deal. Deals aren't deals fail something like 55% of the time. So it's not a done deal until it's a done deal. It's like the Capital One deal with DFS. This is taken. They announced it like forever ago. And they're just now getting around to actually working the deal. This doesn't look like an acquisition chart either. That pulled back just like normal. So doesn't mean it, you know, acquisition deals don't negate things. But those two charts came into alignment pretty well. I don't even know when, I don't even remember when they announced the deal for buying Discover. It's a while back. Anyway, Lily. Potential downside, lower low, below 676. LMT. I don't pay attention to the news. Buyouts are one of the news that does move stocks, but I don't really read the news. I don't pay attention to news hardly at all. Try to watch for some stuff. Usually I'm reading trading desk news, which doesn't usually include any kind of mergers, acquisitions, anything like that. So LMT still grinding below the roadmap line. NGG still not looking great. BA, that hit the target. Watch out for another retrace. Look at that rip right there. Right there. Right here. Probably going to get an outsized retrace back down in this zone. It's going to happen. Whether it happens from here or happens from up even higher, probably going to see a bigger retrace right there before we go higher. 250, Samir. Burke. Potential going up to 71, but this is a downtrend of lower highs. As I've said, IPOs typically start out bearish. That was a three-wave move up. We stopped at a bearish point. Move up, retrace, move up, retrace. This can project this down to a lower low. NVS, sideways, yellow, lower highs, decliners, Dicks. Apparently buying Foot Locker was not great for Dicks. Are announcing they're going to buy it. $2.4 billion deal. Foot Locker doesn't even like, Foot Locker just has stores. It's not even like a, I don't even know. I would just let the competition go out of business. I'm not sure why acquiring them is a great idea. But move up. They built a giant Dick's House of Sport facility here at the mall. They took over an old Sears building, 2 stories, and built this giant freaking thing at the next to the Tesla dealer here. And they call it Dick's House of Sport. Never even been in there. I know Ronimer frequents that place. But yeah, looks like move down, move up, and probably gonna go down. Be my guess right there. Unlike Foot Locker, this one has a first move down, a retrace to a 618. Right there. And now we're going to get an extension, probably down in the 140s. And UNH, right there you go. 250. It's been my expectation. CRWD has upside potential 49 short term. ELV, look for that 351 on the downside. Coin. This is a dangerous spot, just like MSTR. Can we break through? We did get a close above, so technically we triggered off 396. That doesn't mean we won't get a deep 618 retrace before we go higher. Be careful. Baba, probably going to... based on the way this came up here, this move, I kind of expect this to do a bigger retrace. Based on this whole big move off this low from 2022, I expect to see a bigger retrace back down to 82 area. Right down in here. MSTR, like I said, we're sitting there, consolidating right in the danger zone. Kind of set up the upside to 617 at the minimum. Triggered that entry, triggered that trade. But it doesn't negate doing a bigger pullback before we do that. So be careful. These are high price stuff, big moves, big move potential. Like I said, on MSTX, that'd be a 25% pullback. Back to the roadmap line, that could be a 50% whack on MSTX versus the upside here. And FUTU, potentially going down. AppLovin at the resistance, potentially going back down. Humana, probably going back for a new low. Expected this to... I played it short puts last week, but I still expect this to dip right there. AVGO has the upside set up for 274. TMDX consolidating in the danger zone. I would expect another move down, potentially in the 30s if we're going to drop. But if we're going to pop 212, that's a big range. That was a big move from 179 down to 55. That's a lot of volatility right there. That's a dangerous thing to play. Danger, danger, danger. VST in that danger zone. We can see another leg down. That looks a lot like 5 down to begin with. Quick retrace. You can see an extension lower. While it did meet the minimums, we can see a lot of these fail. It's like the danger. A danger setup here. XSRP, which is 2x long on XRP. Wow. And be careful. All coins are going to get a pullback. PDD. Lower highs all the way through from early last year. That would indicate we might go down. Interactive brokers indicating we might actually make a move out to the new highs. NFE. This is one where even though they hit the target, that doesn't mean that's it. And it can go, I mean, zero can be a real option on a lot of these stocks. Be careful. XOP. Oil and gas exploration. Drill baby drill is not bullish on prices. Like prices in exploration is a delicate balance, right? Just because you loosen up the regulation on drilling for oil and gas doesn't mean all of a sudden people can afford to do it. If the price of oil is low, usually you can't afford to go exploring. Like exploring and producing gas wells is expensive. Usually that's something that happens when gas prices are high. It's kind of a catch-22. When CL prices are looking bearish, we don't see investment in oil and gas exploration and production. So this hit a resistance and might take another trip down to a lower low before we can find a bottom. BHVN. Move up and downside. It's the same three-wave pattern. Down to an extension. There's possibility to hold in this zone right here. We need to see some sort of bottom form that could be, we could be working on the 5 down. It could extend just a little bit further. First move down off the 4. And we're actually hitting a point where this may turn right here. Going from the low up to the high. We're at a 618. This could turn into something pretty wild right here. That low, that high, this low, right there. Potential to go up to 290. Baidu. That's a downtrend all day long. Downtrend, downtrend, downtrend. Be careful. If we could break up back to those prior highs, that'd be the kind of the target zone. But right now, lower highs, lower highs, lower highs. DXC. Downside. Extension. Downside. And we're going to extend that down to 13, possibly even 10. ETHU. Taking a whack on Ethereum pullback. All the things I said about leverage ETFs. Here's a 2x on Ether. That low, that high. We could see this very easily pull back right there. It may outperform and make a lower low if Ethereum does a bigger retrace. So stuff that was set up yesterday, bros. I'm actually cautiously bearish on this one. So I'll be very cautious here. Upside is 95 if we're going to break on through. God. We came up right at the prior high. So I want to see that get on up above that really before I turn more bullish. I actually have a short on that one right now. Long-term short out quite a ways. BZ. And here's the high, here's the low. Potential to go to 22. Here's the statistics. They don't really matter. Here's the statistics for that one. Doesn't really matter. EPD. You may be like, why don't statistics matter? Because you need 30 trades right here for it to matter. If you don't have 30 trades, the numbers don't mean anything. Right there. 35. These numbers don't mean anything. And ZI. Again, these numbers don't mean anything. Here's the potential reversal. 1379. I would be very, like, that looks like it's going down. Anyway, that's the list. Made it all the way through. And golly, even though we had 4 on the list, none of them look good for a trade for me. The opportunity I saw today was on ugly. Probably going to get the bounce. 140 is my target. I already have the order on for that. S&P, what are we looking for? Very cautious here. If we start breaking down. So ES was already below the 15-minute. This one has the 15-minute back here. If we start getting below that, back test it. we can get bigger downside very quickly building. So watch out for the downside. Very limited upside left. At 59.30, we were really close to that level right up here. We could still go pop it one more. Yeah, we could get a retrace and pop it one more time. But we need a bigger retrace to support going higher. Like all the things are kind of pushed to limits here. Our stocks above their 20-day, pushed to limits. Stocks above the 50-day, getting pretty close to being pushed to limits. We need a pullback so we can go higher and take this one, take S5TH back to the top. That's the way I see it. Hope you have a great day. Be careful out there. We'll see you tomorrow. Same bad time, same bad channel, 9:15 tomorrow. Go through it all again.